Thomas is the head of digital assets of Swissquote Bank. Swissquote Bank, of course, as I mentioned earlier, listed on the SIX Swiss exchange. That's the Swiss Stock Exchange. They're under the ticker symbol SQN. They've been there for 20 years, so a well-established company. And to have the head of digital assets of Swissquote Bank, as I say, is a real coup. So, Chris, thanks for joining us here at Crypto Fest. We're looking forward to your presentation. The floor is yours.
James, thank you very much. Good morning to everyone, wherever you may be, whether it's sunny and warm South Africa or whether it is sunny but slightly colder Switzerland. It's a pleasure to meet you all. I'm going to kick off this 20 minutes, give you a very brief introduction to who Swissquote Bank are, and then I'm going to go on to talk about institutional investing into crypto assets and perhaps throw a few ideas at what you may or may not be able to do. Any questions, please, as James mentioned, put them in the discussion question and answer box, or alternatively, speak to me in the VIP section afterwards. I'll be there for 15-20 minutes. The objective is to take your details in that period of time so that people are not waiting. I don't want to discuss with one person. If we collectively take details, we'll take it offline afterwards. So kicking us off, I'll get this presentation switched on. FX, which is one of our best departments. Crypto, we've been in crypto since 2017. And the reason we got into crypto so early was that our founders, Paolo and Mark, the CTO and CEO, were both engineers, both from engineering school back in the day in Switzerland, a long time ago, actually. But they were very early into enjoying understanding what blockchain was. And they thought this can really disrupt the financial services sector. They took that one step further and thought, actually, the products, the crypto assets could come onto our platform and be traded as well. And so that's why the birth of crypto assets trading on the Swissquote platform came about in mid-2017. We were the first regulated Swiss bank to do that. And since then, we've moved in huge steps forward. Right, so very brief overview of the Swissquote assets. We are now up to 12 assets on our website, or on our platform, sorry. We started with 5, so we've got the usual suspects. We don't currently offer, or we will not offer privacy coins. We currently don't offer stable coins, but we essentially look at what are the most appealing assets for our demographic, whether they be retail or whether they be institutional. Over the course, we started off with our retail journey, as I said, mid-2017, and that has expanded. We're into institutional custody. We've got some large institutional asset managers using our custody platform. That's something I'll mention again a bit later on. We've also got our FIX and WebSocket APIs coming live next month, which is fantastic. That allows all the institutions to connect directly into our platform, where we've got deep liquidity for them to execute their Bitcoin, Ethereum, or any other currency of their choice. We've also got Lombard loans coming very soon in the next month or so. And we've got staking coming in Q1, which is super exciting. Actively managed certificates, for those of you who don't know what they are, if you think about them as being on-balance sheet versions of ETFs. So ETFs are off-balance sheet products. AMCs, actively managed certificates, are on-balance sheet. So what does that mean? That means that you're exposed to the on-balance sheet risk, the risk of that issuer. So in this case, Swissquote. So you've got to understand the credit risk, which in Swissquote's case is quite low because our tier 1 capital ratio, i.e. the amount of funds that we need to be sitting in our bank accounts as governed by the regulators, is the regulators demand 11% of assets. We've got 21, maybe nearly 22% of our assets in our tier 1 capital ratio. So a very safe Swiss bank. In terms of thinking about alternative assets, traditionally, alternative assets are traded by hedge funds, private equity, VCs. They're not really for normal people, shall we say. These can also include them buying and selling real estate, fine arts, fine wines, things that, you and I can normally not afford. But this, this space is obviously changing, and I'll show you a bit later on why. But why do people seek alternative assets as opposed to just trading in equities and bonds? Well, non-correlated returns, non-correlation to equities, non-traditional returns on assets. That's super interesting to them. You've got to diversify your portfolio sufficiently. We've also got unusual risk exposures. Your risk exposure in fine wine is completely different to your risk exposure in equities in literally every single way. If you look at in the crypto space, your correlations are completely different to correlations of any other asset class, except with probably the exception of the last 3, 4, 5 months. I think most asset classes are correlated very closely to equities, including Bitcoins or including crypto. But generally, Bitcoin has historically, over the last 3.5 years, you can see it's got correlation with US stocks of only 0.15. So what about growth of alternative sector? You can see in the bottom left-hand corner, early days 2003, there was only 6% of investable assets under management were in the alternative space. And through the years, these have accumulated up to the point that in the next few years, these could well be 18 to 24% of collective total assets under management of the whole global financial space. And the question is, within this 18 to 24%, how much of that do we think could well be crypto or tokenized securities? There's a fair chance that could be quite a chunk. So on to the next slide. Why invest in these alternative asset classes? Well, we're stuck in these low interest rate environments. We have been stuck in them for a long time. Portfolio managers are always looking to diversify, to escape from unsystematic risks, to escape the correlations of the challenges of everything else all going the same direction. It can be quite difficult for them to look. So they've got to look at something different. But the challenge with alternative assets is that the liquidity can often be low and the fees can often be high. So you've got to understand, if liquidity is low, you can't just go in and out very quickly and easily, or generally can't. And if fees are higher, then you've got to look for higher returns to be able to compensate for those higher fees as well. So given that, why should we invest in crypto assets? Well, it's a similar case to investing in traditional assets. Again, portfolio diversification, return enhancement, and zero interest rate environment are creating the chase or the search for yield. But also, we've got to think about these crypto-specific challenges and interesting aspects. You've got different return and risk and return factors. In the crypto space, they are very crypto-specific, i.e. they're not affected by traditional supply and demand shocks. So in traditional supply and demand shocks could be challenges with global logistics, which we've seen in March, for example, through the previous COVID wave, where lots of supply chains really got disrupted. Or you can look at the demand side, where you've got the quantitative easing, the challenges of central banks and the driving down of interest rates and the flooding the market with dollars. All of these things really play a part in traditional space, but they don't really affect crypto assets too much. You've got the evolving narratives. Look at the journey so far of Bitcoin. Bitcoin started, people thought this could be an alternative method of payments. It's moved on to more of a store of value. There's also people talking about, wow, could it replace the US dollar in future? Could it be one of the main global reserve currencies of choice? As I say, the currency of choice is currently the US dollar. 70% of US dollars are held by non-US citizens and companies. So this is a bit of a story. We all use dollars abroad. We talk about Bitcoin versus dollar, gold versus dollar. But if you think about this cycle over history, before the dollar, pre-World War II, it was the Great British Pound. That was the strongest, most important global currency, global reserve currency. We then moved to the dollar. Things change quite quickly. And what might happen soon, we may well move into Bitcoin or something similar. And, it won't be a 30, 40-year cycle. It may only be a 10-year cycle or a 5-year cycle. So let's keep that sort of thing in mind. And also retail versus institutional. This is very much still a retail market, but you're seeing elements of institutional coming into it. The retail have had lots of opportunities to trade physical, so-called physical Bitcoin on many platforms, and they're moving also into the DeFi and derivative space. Whereas you see institutions have a challenge. Most of them cannot trade physical Bitcoins, because if they do, then they have to think, where will they trade them? What exchange can they trust? Why should they trust that exchange? What about storage, hot and cold storage? Do you leave it on the exchange? Do you draw it down into cold storage, pay cold storage fees? What about the challenges of technology? Do you trust that? What do you pay in fiat and then wait to receive in cryptocurrencies? There's a delay in all of that. So there's lots of challenges for these institutions to overcome. Some have absolutely overcome it and are comfortable. Most are not. And hence you're seeing the ones who are interested in trading in Bitcoin, etc., are choosing the futures markets. Why? Because they've traded futures in so many other products already. Their middle and back office are comfortable with settlements and all of these other product structures and how to deal with them. So it makes sense to go into the futures as an institution. In terms of thinking about crypto assets today, they feel actually like the emerging markets did in the 80s and 90s for many of these private or institutional investors. And I know most of us are too young to know that. But if you take the feeling or ask someone older who looked at emerging markets a long time ago, that, investing in Latin America back in the 90s, that was a challenging prospect for people. They had high volatility. Yes, they did have high growth, but they also had low liquidity in most assets. And you had a low correlation to other assets. So that was a positive, but low liquidity was a challenge. And obviously those risks of the geopolitical risks were kind of scary sometimes. So why should we invest in Bitcoin? So I'm just going to take you through a couple of very quick pointers that might give you a bit more confidence. Looking at this chart, this is a chart of wallets with less than 10 Bitcoins in them. And you can quite clearly see over the years from 2012 up to 2020, you're seeing a gradual increase. And clearly we know where that trend is going to continue to. Now this is wallets that hold less than 10 Bitcoins. This chart could easily be less than 100, less than 1,000, less than 10,000. Every single way you look at the amount of investments, the amount of new wallets being generated, Bitcoins coming in, it's all a positive trend from bottom left up to top right. So that's just one touch point. This point, I really like this chart. Grayscale Capital. For those of you who don't know who Grayscale Capital are, they're a large trust, large institutional player in the US based in New York. They now have $5.5 billion assets under management, most of which is in their Bitcoin fund. 80 to 90% of that is institutional, American institutional, coming through mainly hedge funds. Why are they going into that? Well, it's a pretty safe way for them to get into the Bitcoin market. Now, what's happening when they invest fiat money into these funds? These funds of Grayscale are going out and literally buying Bitcoins. They hold 450,000 Bitcoins. And if you imagine 18.5, 18.7, 18.8 million Bitcoins in circulation, of which a certain percentage have already been lost. 450,000 of them in wallets, cold storage, safety, secure wallets on behalf of Grayscale. That's already quite a substantial part of the market, and that's US institutional investors. In terms of institutions taking over, I don't think they will. I think that they're certainly going to increase and certainly going to improve this ecosystem. We're seeing a lower volatility as time goes on because there's more institutional involvement, and we're seeing greater adoption. So it's all massively positive. Very, very quickly, I'm going to race through these. So stock to flow, look at Plan B on Medium, what he wrote about stock to flow. This is a commodities strategy or commodities measurement. It works pretty well for Bitcoin as well. It suggests that Bitcoin may well go to 100,000 at some point in the near future. Whether that's the case or not, let's see. Investing in Bitcoin, these are the charts I'm going to talk about in the next slide. The lower chart is where you've got a standard, the lower line is where you've got a standard portfolio of 60% global equities, 40% global bonds. We then put in, we take out 1%, 2%, then 3%, put in Bitcoins to look at the outperformances. That is what I'm going to talk about in the next slide. We'll see some details there. On left-hand column is 0%, then you've got 1, 2, and 3%. This comes largely off the really interesting reports you'll see online by Bitwise Asset Management. Check out their report. They talk about a 1%, 2%, and 5% investment in your global portfolio of Bitcoin and the performance returns. They look at tolerance-based versus time-based rebalancings. It's really interesting. I think the points to note in it are that the volatility doesn't really increase with the additional Bitcoin, and the maximum drawdowns don't increase with additional Bitcoin. So that's extremely positive downside protection. On the upside, obviously, you get enhanced returns. Some names that have come into the market very recently, some of you might be aware of them. Tudor Jones invested 1% of his assets into Bitcoin. Why? Because he wants to bet on the fastest horse, i.e. the market that he believes will perform the greatest in the next 18 to 24 months. DBS have recently, largest bank in Asia or Southeast Asia, have just come out this week and released their crypto platform, exchange and custody. Microstrategy, crazily, have put 100% of their treasury, so about $500 million into Bitcoin. I don't advise that as treasury management strategy, but that's up to them. That's their choice. A few ways to invest. You can invest on exchange platforms such as Swissquote. You can buy actively managed certificates. We spoke about earlier. Swissquote and many others have actively managed certificates. You can invest via funds, fund of funds, crypto, or standard hedge funds. Most of these funds are quite small at the moment. Some interesting strategies we're seeing, some of them go long stocks, long the Bitcoin physical. They'll sell calls against it to create a more institutional 20 or 30% upside. You see a lot of them doing market making. You see them arbitraging between different exchanges. There's a whole load of strategies. So feel free to, as I say, reach out to me in the VIP room. I'll be there. I'll take any further questions. If not, you can certainly reach out. Contact me, christopher.thomas@swissquote.com, christopher.thomas@swissquote.com, or contact me on LinkedIn. Happy to talk to you. Thank you very much for listening, and talk to you soon. Thank you.